Hello, this is Michael Kramer of Mott Capital. Today is Tuesday, November 4th, and it's around 4 p.m. New York time. The good news is that there will be some economic data here in the U.S. The bad news is that the government remains to be shut down, so we won't be getting very much data after this week's few reports. On Wednesday, November 5th, we will be getting the ADP National Employment Report. Analyst estimates are for 28,000 jobs who have been created in the month of October, up from last month's decline of 32,000. 9:45 a.m. we'll be getting the S&P Global Composite and the S&P Global Services PMIs. At 10 a.m. we'll be getting the ISM Services PMI. Estimates are for an increase to 50.8 from last month's reading of 50. On Thursday, November 6th, we'll be getting the Challenger layoff numbers. There's no estimates for that. Last month's numbers came in at 54,000. And then on Friday, November 7th, we'll be getting University of Michigan preliminary numbers for the month of November. Sentiment numbers are expected to decline to 53.2 from 53.6. Expectations are expected to remain unchanged at 50.3 from last month's number. And then preliminary conditions are expected to rise to 59.2 from 58.6. When we take a look at markets, with the absence of U.S. data, it's surprising to some degree because we've actually been seeing the euro weaken quite a bit versus the dollar, and the dollar has really strengthened rather materially versus a number of other currencies, even with the absence of data, which is kind of surprising. And so the data that we'll get, the little bit of data we will get, will help to add a little bit of color in terms of what the market may be thinking about when it comes to the economic outlook. Certainly stronger economic data, stronger job report from ADP could lead to a stronger dollar and a weaker euro. I mean, clearly at this point we've seen the euro break down through support. That was hovering around this 115.50 region, and at this point it looks like the euro could be heading back towards this 114.10 area, which is the next major level of support. Certainly when you look at the RSI, you can also see that's been trending lower, and while it's getting towards the lower end of the range, it's not really signaling that we're oversold yet. So it does look like the euro could continue to weaken some. If for some reason the euro were to reverse, which I don't think is likely to happen given the setup, we're looking at potentially moving back up towards 116.5. The British pound has also been weakening versus the dollar, and there's obviously lots of things going on in Britain with this upcoming budget vote and potential for higher tax rates. And we've seen the pound break below support at 131.60, and right now we're on our way to 130. And it looks like we could even be heading even lower than that, perhaps back to 127. You can see how we had this really kind of straight line rally earlier back in April. And these type of patterns tend to be treated almost like gaps, and so it wouldn't really be surprising to see some sort of decline back to where we originated from at 127. The one thing that is worth noting is that the pound is extremely oversold now with a reading of 23.5. And so it is likely that we could be looking at a scenario where the pound maybe consolidates for a few days, maybe it even bounces and tries to break and retest support at 131.60. We can also see it is trading below its lower Bollinger Band. So we are in a scenario right now where we could see the pound either really materially accelerate to the downside in sort of a big push, which would allow which sometimes happens in oversold conditions, or we're likely to see it just stabilize and maybe trade in this region for the next couple of days before resuming that move down. The yen has also been weakening versus the dollar, and this is also somewhat surprising given that the BOJ may be raising rates at some point in the future. It just doesn't seem to matter at this point. Clearly, we can see that the yen has been trending higher. We can see the RSI has been trending higher. We can see we're not overbought yet, at least the RSI. We can also see on the Bollinger Band we're kind of at the upper end of the range. But at this point, it looks like we could see the yen weaken even further. Here's our level of resistance right here around 140.54 1/4. And it's looking like the next major level of resistance comes around 158 3/4. There's a little bit of resistance at 156.60, but that looks fairly minor at this point, and momentum clearly favors a weakening of the Japanese yen. And you can see it a little bit better on the dollar index, because what appears to be happening, at least on the dollar index, is that we've potentially put in a double bottom pattern, and it looks like we're clearing the neckline at this point. In fact, today it looks like we just cleared it, and there is clearly a big uptrend that's formed in the RSI, also suggesting momentum is really building. And if this is the case that we have broken out, then the next area we would be looking at is at 101.79 to 102 on the dollar index, and that would also indicate to me that you would see the yen weakening further, and you would see the euro and the pound also weakening further. Gold prices have continued to look fairly weak. When we look at where gold is currently, you can see it's been building a base around 39.35. However, you can see that momentum as measured by the RSI is clearly negative. We're not even close to being oversold yet. When we look at it on a more of a granular look, you can see how gold has just been bouncing around off this 39.30 region. And I think when we look at it more on a daily chart also, you can see that gold is trading below the 20-day moving average, and it's trading below the 10-day exponential moving average. It looks like at this point gold's next stop is to likely come down to break support and maybe end up somewhere around 38.40 or so before consolidating for a bit longer. It's possible, though, that as it comes down and these Bollinger Bands begin to expand or begin to turn lower, that you would see gold maybe continue to slip along with it. We can't really rule out the possibility, though, that gold is heading all the way back to 36.50. But at this point in time, the next area of support appears to be 38.50. If for some reason gold were to move higher, I would expect there to be solid resistance at the 10-day moving average at 4,014. That 4,000 level has just been very tough for gold to get through over the last couple of days. When we take a look at Brent oil, there's not really much happening here. We can certainly see that we've put in a decent bottom again. And right now we're looking for some sort of sign of momentum change, and there really just isn't any. I think it's going to be very tough also to get a momentum change, given that the dollar index could be set to strengthen. Here you can see here's your trend line. We're really not close to breaking above that. Here's your 10-day exponential moving average. That currently is acting as support, and so we're not seeing anything there. Your 20-day moving average right below it. It looks like maybe your upside is limited to the uptrend at 66.5, and your downside right now is back to 60.50. Outside of that, I think you probably have other things to do other than look at oil at this point, because it doesn't really seem as if there's much room for it to go anywhere other than those two sides of the coin. When we look at the DAX, we can see that the DAX has pulled back again. Again, the lower end of our resistance support area is somewhere around 23,300 to 400. We've seen that the DAX has really struggled to get above this area of resistance around 24,400. We've tried to do it on 2 occasions, and on both occasions we failed, and now it looks like we're trending lower again. Here's your RSI. It looks like we could be in a scenario where we're going to see the RSI eventually drop and then start heading back towards 30. That would obviously be negative for the DAX and suggest that we come back down to this 23,300 range again. Lots of gaps to fill in this region, and so we have to be careful, because if we break 23.4, we're looking at a scenario where we could fall rather quickly and sharply, because there's just not a lot of support in this area. Likewise, resistance is going to remain at 24,400 for the foreseeable future. The FTSE continues to do extremely well despite some markets struggling in Germany and even here in the U.S. And here's your uptrend that you currently have in place. It looks like we could be forming what appears to be a bump and run pattern. This is a bearish reversal pattern. If it is the case that this is a bump and run, then it looks like maybe this is already broken, and we could be seeing a scenario where we head back down to this trend line. This trend line is obviously important because a break of a trend line sets up a potential return to the lower end of the trading range, which would be somewhere around 9,100. You can see the RSI now over 70 on 2 different occasions. You can also see that we reached overbought conditions. So it's looking like we're in a scenario here where we should be really seeing the FTSE consolidate sideways or at least pull back down and retest this trend line. The NASDAQ here in the US today was down over 2%. It was a pretty rough day. Here you can see we gapped below the 10-day exponential moving average and continue to trade through it, trade away from it. And we haven't really seen the index below the 10-day now on just a few occasions. And this time, again, every time we've seen us get below, we've managed to bounce back really quickly. The only time we didn't bounce back really quickly was on this occasion. It took 4 days, and on the fourth day, we were able to get back above it. So, and I think the point here is that the day that followed the big sell-off in early October was followed by an up day, which met the 10-day, and then we fell the next day, and then we eventually bounced back above it. So what we're looking for here is for tomorrow to be a follow-through day. We don't want to see a scenario where the NASDAQ opens higher tomorrow and continues to trade up to the 10-day exponential moving average. Ideally, if you're bearish on the market, you want to see the NASDAQ open lower again tomorrow and continue to move away from the 10-day exponential moving average. That would really be more of a sign of a change in trend actually taking place, as opposed to what we've been seeing on some of these other occasions where it's like we've just fallen to it and then we've consolidated around it to use it as a springboard to move higher again. And so what I'll be watching for to see if we do see it begin to move away and maybe fill this gap that was created here around 25,200. That would be the next area of support. Clearly, you can see the NASDAQ's momentum has been shifting lower, and that's important to note as well. It's the same thing for the S&P 500, except support somewhere around 6750. We had those 3 days of gaps. We also gapped below the 10-day exponential moving average on Tuesday, November 4th as well. And again, if you're bearish on the market, you want to see it begin to follow through on the 5th and on the 6th. If we bounce right back up to it, probably means we're going back to the highs around 68 to 6900. The Dow also broke through it. Again, it looks like there's some decent support for the Dow around 46.8. A break below 46.8 opens the door to returning to these lows at around 45.875. If we get back above the 10-day moving average, you're just going right back to the highs probably at 47.800. Although given some of the damage done today here in the U.S., it looks a little bit more like there's potential for it to go a little bit further. Anyway, have a great rest of your day, and we'll see you next week. Bye.